A lot of people say support and resistance no longer work, but the truth is that what they basically don't know how to trade support and resistance. And that's why in this video I'm going to share with you a complete guide on every single thing you need to know about trading support and resistance, so that what you can actually trade it profitably. So in this video I'm going to share with you 5 solid points of actually trading support and resistance. The first one being how to identify the right levels, because a lot of you don't know how to identify the right support or resistance levels whenever you are trading. And the second one is the type of entries that you can take when trading support and resistance. When trading support and resistance, you can't take on random positions. You need to know the right positions to actually take from. Now the next is simply the types of entry confirmations. Now when you know the type of entry, each entry has its own confirmation method, so it's very important you know which of the confirmation method work best before you actually execute any trade. And finally, the setting your entries and exit. Now after knowing the entry confirmation and everything, knowing how to quit the trade, knowing when to close your position, like take your profit or set your stop loss, is also very important. A lot of you take trade without knowing where to keep your stop loss, and that's why you keep on taking losing trades. And finally, simply how you can actually get to manage your trade while the trade is actually moving live. So this video is more like what a full course on supply and demand, where I'm going to do every single thing on here with you guys. So guys, with this said, let's get down to business. So guys, before I get down to the main tutorial, one of the best things you can do for yourself as a trader is basically trading with the right broker. And in this video is actually sponsored by Light Finance. They are one of the most legitimate brokers out there and has been in the industry for over 20 years. They have some of the best trading conditions, faster trade execution, and to top it all up, even if you're a total new beginner who is getting into trading and doesn't know how to trade yet, well, they actually give you the opportunity to copy other profitable traders without having to pay anyone for signals. So guys, now the first point is basically we are going to talk about how you can actually identify the right levels when it comes to trading support and resistance. How can you actually identify the right levels to know that, well, this is a support level and this is a resistance level? So for that, let me move over to my chart. Now you can see here is a full support and resistance setup that I took on this card JPY. You can see identify 1 hour support and 1 hour resistance. If I should go down to the 1 hour time frame, you can see it clearly. The market broke out of the resistance level, came back to retest it, and went straight to TP. As you can see today, the market fell back again to the same resistance level and is buying back off from it. But let me just clear it all up. Now let me just take a different market for this setup. So let me take a look at GBP USD. So we are going to use GBP USD for this whole tutorial. Now when it comes to me trading support and resistance, one thing I do first is basically I start from the daily time frame. Now the reason why I like trading from the daily time frame is that one of the greatest mistakes you can do as a trader is basically trading against the daily key level. If a daily market is at a support or resistance level, buying against, let me say a daily market is at a daily resistance level or a daily flip zone, buying against it could actually cost you a lot. So for this reason, I always start from the daily levels, trying to identify the daily flip levels. So now looking at this one right now, when it comes to me identifying this, I prefer using the line chart. Now the reason I love the line chart is that the line chart actually kicks away every single noise in the market, and it only focuses on the key levels. So you can see for this one right now, immediately I switch over to line chart, every noise is kicked off. So if you are coming to identify support and resistance level, I would advise you to start up with a line chart. It's very easy to actually identify the right levels from here. So now basically, the first thing I do is simply I start from the daily time frame. Now when I start from the daily time frame, what I'm looking from the daily time frame is to see if I will spot any daily flip zone. So here right now is a good daily flip zone, as you can see. Let me go back to the line chart. Now I'll just highlight it and daily flip zone. Now I call these levels the daily flip zones because here is it. You can see at first this area was a daily support level. You can see it was a strong daily support level before the market broke below it and traded for a long time, came back to retest it before going above it. So with this metric in mind, we won't be trading against any sort of these levels. However, we'll be looking forward to trade in support of these levels. So when trading these levels, I always advise that you always take a look at them to make sure you don't go trade into them. So now let me just, okay, daily flip zone. So when it comes to trading support and resistance, the first thing I advise to do is simply go back to the daily time frame and identify the daily flip zone. Now from here, then I drop down to the 4 hour time frame. Now on the 4 hour time frame is where I actually start identifying my real support and resistance. Now looking at the 4 hour time frame here, here is the 4 hour support right here. This place here is the 4 hour support. So let me just click on it and then I'll come over here, 4 hour support. Now if you look at this chart right now, here is a 4-hour resistance right here. As you can see, here is a 4-hour area of resistance which actually matches with the daily flip zone. So basically I'll just mark it up here, 4-hour resistance which match with the flip zone. So 4-hour resistance. Now once you have the 4-hour levels, next thing you drop down to the 1-hour time frame. Now on the 1-hour time frame here, you just want to see if there are any sort of levels that you can actually mark out. And if you look at this right now, we have a 1-hour support right here. So here we have a 1-hour support right here. So I'll just mark it 1-hour support. And then over here I'll mark it as, so here is the 1-hour area of resistance, because I'll say this is the last flip high above all of these highs. So I will take it as a 1-hour resistance. So let me just change it to 1-hour resistance. So now guys, you can see here is our 4-hour support, our 1-hour support, our 1-hour resistance, which is below the 4-hour resistance as well, which is very close to the flip zone. Now I also have these levels marked at. Now we are done with the first step, which is actually identifying support and resistance level. Now let me give you a definition of a support and resistance level for those of you who might have not known it yet. Now a support or resistance level is actually a level that the market has actually tested and then giving a lot of room away from. Like for example, let me change over to the candlestick chart and give you a better explanation. Now the reason why this place is a 4-hour support level is because you can see clearly that the market went above it, came back to retest it, and then traded in between it, eventually came back to it, and then left it again. You can see, and then started trading away from it. So you can see any level that has multiple touches like this is known as a support level if it's on the downside, and if it's at the top side, it's known as a resistance level. So basically, support level is the lower part of the market that the market has tested over and over again, and the resistance level is the level at the top that the market has also tested over and over again and hasn't been able to break away from. Now the next point says the type of entries when it comes to trading support and resistance. Now when it comes to trading support and resistance, we have so many type of entries that you can actually take. Now let me go down and then draw them out for you. Like for example, here could be your resistance level and here your support level. So let me say in a situation whereby a market moves in this manner. Maybe the market goes, comes, goes, fakes out, comes into it like this. Now in this sort of market, you can't actually take anything yet. So the first sort of entry when it comes to trading support and resistance is known as the break and retest entries. Now the break and retest is simple. When the market is moving from level to level like this, let me say eventually this market broke out of this level, maybe broke out of the resistance level, and then it comes back to retest it. Now you see the moment the market comes back to retest it, now this is the first type of entry when it comes to trading support and resistance. It's known as the breakout and retest. Now immediately this market breaks out and then prints a confirmation, which we'll talk about later on. Immediately this market comes back like this, well, you get your entry, you keep your stop loss, and then you set your target, take profit, probably 1:2 and more. So guys, this is the first system of trading a support and resistance system, simply the break and retest method. This one, the market breaks out, come back to retest, then you take your trade immediately. Now this method works a lot, and this is the oldest method that a lot of people actually use to trade support and resistance. Now the second method of trading support and resistance is known as, let me identify another one, let me mark this again. So assuming here is your support, let me just quickly draw them out. So now this second method is basically known as what? Trading in between the range. So for example, you can see clearly that the market is actually ranging from one support to one, from the support to the resistance, from the resistance to the support, back and forth like this. Now in this sort of market, in most cases, you will be lucky enough to actually spot an order block being created. So for example, when the market is moving like this, in some situations, it's actually going to print an order block, and an order block in this sort of market is probably the last bearish candle before the market went back to test the resistance area. Now once you identify this sort of candle, then eventually this market actually trades back into this area here, then immediately it comes back here. Well, this is another method whereby you can actually take your entry. So from here you can actually take a buy immediately. Why? Because the market actually came back to retest an order block that it created before moving back to this level, and you take your entry with your stop loss right below the last week or right below the level like this. This is the second type of entry when it comes to trading support and resistance is whereby the market creates an order block and look forward to buying from that particular order block if it's from the support level, and looking forward to selling from the order block if it's from the resistance level. So now these are the two type of system that I personally use to trade this support and resistance level, because these ones work best for me. So guys, these are my two that I will actually recommend when it comes to trading support and resistance system. It actually works like mad. However, let me give you the third one, and the third one requires a lot of patience if you actually want it to work well for you. Like, it basically requires a lot of patience. Now let me draw out the third one for you. Now the third one is simply, here is your resistance, here is your support. Now for example, you identify the support and resistance on the 4-hour time frame. Now if you identified it on the, okay, let me use the 1-hour time frame, it makes more sense and easier. So let me say I identify a support and resistance on the 1-hour time frame. Now the market moves like this, came to retest it, comes back, came to retest it, comes back, and then eventually came here, then came back down. Now in this situation, now let me just say the market then created an order block around here. So let me say this market printed an order block around here. Now immediately the market prints this order block around here. What you do is simply you identify this order block. Now once you identify this order block, with this method it looks similar to this previous one, but there's a little bit of difference. Now once the market prints this order block here, you patiently wait for the market to trade back into the level. So on the same time frame, the market then trades into the level like this. Now once it trades into the level, unlike before that, you have to take your entry once the market comes to the level or prints whatever confirmation that we'll be talking about later on. With this system, you basically wait for the market to come back out of the level. Now once the market comes back here, then you identify the new level the market created. Now you mark out the new level that the market created. Now once you mark it out, you basically wait for the market to trade, sweep at the high there, comes back into it, and then you actually take the sell. Now with this one, the market actually have to play out your strategy 2 times. The first one is simply it comes back to the actual order block that you created at the resistance level, then it bounces off, then you basically wait for it to retrace a little bit, then it comes back, sweep out this level that it created here by itself, it sweep out the previous high that it created, which gives you a short market shift, and then comes back to retest the level, then you sell it. Now this method will actually secure you a lot of, like, let me say it will give you a higher win rate when trading support and resistance if you want to take sales like this. However, the risky part of this method is that what you are actually going to miss out on a lot of trades. Like, this method is similar to this one. However, with this one, there is a high chance that what you might take some trade that will hit your stop loss, but the truth is that what you are actually going to get a lot of winning trades with that particular method more than this method, because with this method here, you take trade on arrival after a confirmation is printed, but with this one you have to wait for a different pattern to play out of the whole system before you actually take your trade. So with this one here, if you get any trade, there's, let me say there's 90% chance that the trade is going to go your way, but with this one here, there's just, let me say 70% chance that the trade is going to go your way. So this is the main 2 difference between these 2 methods. I personally, if the market is highly convincing, I like this other method than this one. So guys, this is the 3 methods that are more guaranteed when it comes to trading support and resistance. However, there is still one more, which is the 4th method of actually trading support and resistance as well. Now let me show you this 4th method. Now with this 4th method, let me say you have your support level, your resistance like this, and then you have your support like this. Now in this situation, let me say the market is ranging in between here, maybe it dances up and down, and eventually this market then comes over to test the support level. Now with this method, immediately the market tests the support level here, right? Immediately it comes to the support like this, you just wait for a candle close. So for example, it comes to the support and then you receive a candle close like this. Now with this one, immediately receive this candle close, whether there's an order block or no order block, you really don't care. You just take your trade and then you go in like this. Now with this one, you don't wait for any other block to be formed. Once the market comes to the support or resistance level and gives you from the support level, maybe gives you a bearish close, you can just sell it immediately. If it gives you a bullish close from the support level, if it gives you a bullish close, you buy it immediately. And from the resistance level, if it gives you a bearish close, you sell it immediately. However, with this strategy, I personally don't recommend it that much because the win rate is very low. The truth is that with this strategy, you have about 50 to 60% win rate. That is the truth, and it will require you to sit on your chart a lot of time, and that is a lot of stress that you don't want to involve yourself with. So for that reason, I usually discard this one off my list. Now the next is simply the type of confirmations when it comes to trading support and resistance. Now this is very important because without the right confirmation, taking any sort of trade is more like you just wasting your money, because at the end of the day, you're actually going to hit a sell. So let me go back onto the chart and then let me reset it. Now the type of entries when it comes to taking a trade from a support and resistance level is simple. Now if you are trading the break and retest system, which is the first one that I shared with you, the break and retest, the moment the market breaks out of the resistance level or the support level and comes back to retest it, now for you to enter, so let me draw out a candlestick pattern for you. So let me say here is a market that came to retest it. Now for example, you mark out your support and resistance on the 1 hour time frame. Now on the 1 hour time frame, the market has come back to retest it. Now the next thing you do is simply you come down to the 30-minute time frame. So once you come down to the 30-minute time frame, what you are waiting for is simply you are waiting for a bullish close on the 30-minute time frame. So for example, this is the structure you are waiting for. Eventually the market that will come here is obviously a, so let me get something. Okay, here's it. So the market that will actually come back to this level will be a bearish candle. So let me just zoom it out and then let me remove the settings that actually apply to it. Style, extend, don't extend. Okay, so eventually the candle that will come back to retest here will be a bearish candle, which will be a red candle. So let me make it red. Let me fill it with red and then set the opacity to 100%. Good. So the candle that will come and retest your level, since it's coming back down, will be a bearish candle. Now once this candle comes to retest it like this, now what you wait for is simply you wait for a bullish candle to be formed. So let me just duplicate this particular one. Now just clone it. Now then you wait for a bullish candle to be formed. Now with a bullish candle being formed, you want the bullish candle to close above this bearish candle. So with this one here, you wait for a green candle to be formed. If your chart is a red and green chart, so basically you wait for this one. Now immediately this candle closes above this previous one, you take your entry and then keep your stop loss behind here. So basically once the market comes back to it breaks out of the level, comes back to retest, it brings this bearish candle and then gives you this bullish candle. Your entry comes right above the bullish candle and your stop loss, you keep it behind these two candles like this. So guys, this is the first entry method when it comes to trading support and resistance. Now this method is highly effective. Now highest thing this market can do after this structure is being created is maybe the market might retrace halfway and at times it might come back to retest here, but the chances of you hitting your stop loss is very narrow. So guys, this is entry confirmation number 1 when it comes to trading support and resistance. Simply waiting for a bullish engulfing candlestick after a retest on a resistance level. Now another form of entry is basically this. Let me show you that other type of entry. So this sort of entry is known as the weak rejection. So let me set it all up for you. So this one is known as the weak rejection. So let me say the market comes and then let me change this to green as well, and then change the body to green. Okay, so let me say the market comes and then taps your retest. So maybe after it goes up like this from the breakout, it comes back and then retest your resistance level like this. Now immediately retest, it might give you this sort of rejection on the 30-minute time frame or whatever time frame that you are waiting for your entry. Now once it gives you this rejection, your entry comes right below this rejection. Immediately you get this rejection and the candle closes with this rejection, you enter right here and then keep your stop loss some pips away, probably something like this, and you are good to go. Now once this rejection is formed, you enter under this rejection immediately. Now for me, I love entering with this rejection. The reason why I love entering with this rejection is because it actually gives me a better risk to reward. In most cases, this rejection will actually happen swiftly, which means that you don't have to wait for too long. Once it happens like this, you enter at the rejection, your stop loss will really be tight, and then you just basically sit back and wait for the market to play out your profit. Now this entries method that I'm sharing with you work regardless of the system you are trading, whether you are using this break and retest, or you are using this you are using this order block method or this order block method. It doesn't really matter. This system actually works. This entry pattern works on all of them. Now next thing is simply setting your entries and exit. Now I've already talked about it while showing you the entry confirmations already. Now when you are setting your entries and exit, which is where you keep your stop loss and take profit. Now for this one, I'm going to use a real chart to actually show you, because it's more important I use a real chart than use some random chart. Now let me come over to gold, because the last trade I took and closed right now is actually on gold. Now let me go down to the 1 hour time frame. Okay, so here is it. Right here. Now you see right here, you can see this was, let me go over to the line chart. You can see right here, this was a 1 hour support. You can see it right here. This was a 1 hour support here. Let me mark it. And then a 1 hour resistance. Now the market breaks into it, so let me just change over to the candlestick. Now after this support and resistance get created, the market went out. You can see it came back to retest here. You can see the first one I showed you here. After a retest, you get a bullish candle, which is the first entry method I shared with you. You can see you could have entered at this top here, your stop loss here, and you would have gotten an easy 1:2 from here. So if you had entered here, your stop loss behind here, you would have gotten a good 1:2 right here. Okay, it wasn't up to 1:2, it was a 1:7, but you could have gotten it right here. Or you could have used the second entry pattern I shared with you, which is the rejection wick. Immediately you got this rejection, your stop loss behind the rejection like this, and with this you could have gotten a 1:3 from this good setup. Now you can see that this strategy is not just some random strategy, it's strategy that actually delivers results. Now let me just get it off and focus on this to show you how to set your stop loss. Now you can see over here I use the second system that I shared with you, which is the order block method. You can see the market created this support here and then trade off it. Now immediately the market trades off it, it came back to retest the support. Now immediately it came back to retest the support. Let me go down to the 15-minute time frame. Now for this, I actually use the 15-minute time frame to get my entry. And I got my entry at the return of this week here. Let me actually, I can look at my, okay, let me come over here and then look at it. Okay, so here was a trade on gold right here, which is the one way down here. You can see it here. I took this on my Light Finance 10K prop account. You can see it right here. I entered at 41.86 on gold, 41.86. So let me just identify that. So 41.86, that was down here. Yes, here is it. And then my stop loss, I kept it as usual below the level. Let me go back to the 1 hour time frame. So let me just get it all on the 1 hour time frame, because that's where I took the entry at 41.86. Okay, so here is 87, no problem. Let me just adjust the stop loss right here. So yep, so this was immediately the market came here. I went down to the 15-minute time frame straight ahead, and the market gave this bullish close. And after this bullish close, it was a bit too far off for me, so I had to wait a little bit. So immediately the market fell back into the level here. I just took the entry at this deep point here straight ahead, and you see it could have easily hit my 1:3. However, immediately I was up in 1:2. I had to set my break even to a 1:1, which the market actually came back to hit before it continued moving. So guys, this is the first thing of setting your stop loss. So when you are setting your stop loss position, it's very important that what you keep your stop loss below the level you're entering. So for this one, I entered with this candle. So more importantly, I need to make sure that what my stop loss is below that candle, because in some cases the market might come really deep to retest the lowest part of this previous candle. So when you are taking it with the order block method, make sure that what your stop loss position is below that particular order block where you are taking the trade from. Now this is the first one when you are taking it with this method. Now whether you are taking it, regardless of the system you are taking it, just make sure that what your stop loss position is always below there. It's always below the candle that qualifies your entry. Is very important. Now in some situation, let me say your entry was a bit far off. So let me come over to the 15-minute time frame. So let me say you took the entry at this particular point here. Still on still, if you took it there, your stop loss still need to be below here. And if your stop loss was still below here, you can see that what it still won't be tapped when this wick came in. So whenever you enter the trade, always keep your stop loss below that particular candle that qualifies your entry. Is very important. Without this, you're actually going to end up hitting a lot of stop loss or taking a lot of wide trade, and you won't be able to hit any good profit margin. Now the next one is simply, the final point is simply, how then do you get to manage your trade, which is trade management. Now here is it. Trade management is very important when you take a trade, because you can be in a profitable trade and without good management you actually end up hitting SL. So now let me drop back on this trade. Now whenever I take a trade, maybe I'm risking $100 for the trade and I'm currently up $200, and I see that what there's still a good room for this market to actually move. Now one thing I literally do is simply, since I took a position and I'm risking $100 and now I'm up a $200, what I basically do is simply, I will shift my stop loss to $100 profit margin, or maybe I'll just say, let me just say maybe $70 to $100 margin. So maybe for the whole of that day I have not hit any SL. I don't have any bad trade for that day. I might keep it at a $70 break even point, meaning if the market comes back, I'll actually secure $70 from it. That's if I'm risking $100 for the trade. But if it's a day whereby maybe I just had a losing trade where I lost $100, well, for this other trade, I'm actually going to keep my break even at exactly $100. So in case the market comes back to hit it, I'll just close off with no profit and no loss for the day. So basically what I'm trying to let you know is simply, when it comes to trade management, it's always good to set your trade to break even when you're in profit. So if you are in profit of $200 and you are risking $100, secure $100 from it, so in case the market comes back, you have no problem. Now in case you are not willing to secure $100 by maybe you don't want to close off at break even, you want the trade to actually run, you want to maintain your original stop loss position that you set, while you are up $200, if you use one lot, then you close 0.5 lot, of which means that what you still end up closing $100, you maintain your original stop loss, and by this time around, if the market comes back to hit your stop loss, you are no longer going to lose $100, but you lose $50. Now that $50 minus the $100 you took earlier, which means that what you end up with $50 profit. That is if the market comes back to hit your SL. But in the case if it doesn't come back and it continues going, you get to secure more profit. So guys, that is basically how you get to manage trade when you are trading. It's very important, mostly if you are trading support and resistance. Is very important, because with support and resistance, the retest in some days is really crazy. Now if you look at this trade on gold, is actually in a good position to buy, but the reason why it's refusing to buy is because of this little support you are seeing here. Because support and resistance levels are very important. You can see so many retests. Market comes, it gets here, it fell off, gets here, it fell off. The reason why I haven't set mine to break even was because the market came here and then was started retracing, so I had to set it to break even immediately. And you can see it broke above it. Now it came back below it and it's just focusing on the sell side. Now for me, I'm done trading. I no longer have interest in holding trades overnight. So by 5 p.m. Ghanaian time, in most days, I'm actually done trading, unless I have a trade that is in deep profit and I'm in break even already. If I'm not in break even and I'm not in any deep profit, I'll just set every single thing to break even and I'm done for the day. So basically, that's basically all I have for you in this video. The most important thing here is simply learn to wait for your confirmation entry. And if you have any question regarding every single thing I just shared with you right now, do it to let me know down in the comment section. And also join my Telegram community where I drop free trading signals. And I also go live every single day of the week when there is a trading opportunity. Like I basically go live every single day on TikTok, where I share live trading setups that you can actually see my setup and we'll get to trade and make profit together. Like today we actually traded gold all together live and we actually hit TP on gold. We risk a 1:3 and we actually got a good risk to reward from gold. So guys, that's all I have for you in this video. Hope to see you in my next video, and don't forget to use Blueberry funded with my promo code PT20 to actually get 20% off. It will be there in the video description, so you can actually get funded and start trading huge capital with a little token you have. And if you want to trade a live account as well, there's totally no problem. You can sign up to Light Finance using my link available in the video description. So guys, see you in my next video. Bye.